What's going on, guys? Today I want to make this quick video discussing a strategy that I like to use and I kind of recommend to new beginners, that might be interested in selling put credit spreads. This strategy is just selling one leg of that, and it's a cash secured put. So this particular ETF I am bullish on, especially with the current president and the administration. Clean energy, I imagine, for the next year, a couple years is really going to be a big focus for them. Plug Power, a lot of other type of energy-based companies, I think are going to do well. Obviously, that's not financial advice. That is just my personal opinion. And don't just go blindly do the same trades that I'm doing. Just, learn from what I'm doing, learn from my mistakes, and then make your own decisions based upon that. So as you can see here, it's currently $31 while I'm recording this video. We are February 4th, 2021. I hope everyone's having, a great week. It's Thursday. It's been a pretty green week considering, last week and all the craziness we saw. I hope you guys are all making good gains, making, good decisions and learning from, your mistakes and, ultimately just staying in the game. The longer you're in the game, the more experience you're going to get. And then, over time, stuff's just going to compound. The only way you can't win, in my personal opinion, is if you lose. If you continue to fail, don't do like crazy big losses or anything like that. But if you continue to learn from your mistakes and continue to invest over time, that is the true way to success with investing in the stock market. So I'm going to make a quick little video here discussing how you can sell a cash secured put. So this is a bullish position. You're pretty much saying that I think this stock or ETF is going to go above my break-even price before expiration. So as you can see here, I sold the 31 put, but my break-even actually is 30.15. So, it's currently at 30.99. It has been going down a little bit since yesterday and today. But, I'm bullish on, clean energy like I mentioned earlier, and I think I'm going to be good for this position. Obviously, if it continues to go down, I could potentially get assigned with 100 shares. So pretty much what a cash secured put is, you're putting up the collateral, right? So I had to put up $3,100 because this is at the 31 strike. So you take the strike and times it by 100. So I have $3,100 at risk currently. Now, with this, someone else is buying the put for $85. So I am getting a credit of $85. So I essentially am going to, make that regardless, $85. If it, finishes above 31 or it finishes above my break-even price, 30.15. Obviously, I'm probably going to close it before expiration just because I don't want that extra chance of it getting exercised in after hours. So I'm probably going to aim to close it between 50 to 75% profit. And what that means is you just multiply this by 0.50 or 0.75, and then I could essentially roll it from there. Either roll it out or go to a different play. So that's my thought here. So in order to enter this position, you have to have, I think it's level 2 for Robinhood, but it can be different for whatever broker you're with. I believe it's level 2, the ability to sell cash secured puts. So you would go to the stock or ETF you want to do this for. You would click the trade ICLN options, go to sell put, and then this is obviously only 1 day till expiration. So I went 1 week out. There's different strategies with that. Some people go 3-4 weeks out. I've heard most of the decay really starts to kick in if you're within that 45-day window. So it would be something around the March, it would really start to kick in. But you can see here my delta is minus 48. My theta is minus 0.04. So every day that passes, almost $5 is going to get ate away from this contract here. And then every dollar movement, either up or down, it's going to be affected by the delta there as well. So this is an in the money put, cash secured put, like I mentioned. So this would be out of the money, and this is in the money. And as you guys can see here, that's pretty much it. So you would select this, and it would tell you like, okay, you're getting a credit of $80 or 80 cents. And you'd click continue, and then you would select how many contracts you want. And as you can see here, Robinhood labels it as a short put because that's what it is. And then technically it's 100 shares per contract we sell. So for this instance, it's like I'm owning 48 shares. That's kind of like the way I look at it. So I'm selling this contract to own 48 shares, and then I'll get $80 credit for it. And then like I mentioned, the collateral is the strike price times 100. So I'll be looking at, 85 divided by 3,100 is around a 2.7% return in about a week. So that's not too bad, especially when looking at a 52-week. If I did this every week or every other week, it could be a potentially good play, selling cash secured puts. And so if you understand, this concept, then put credit spreads are almost the same thing. But the only difference with the put credit spread is, I'm selling this, it's going to take $3,100 of collateral. But if I buy this, I'm offsetting all that collateral, right? As you can see here, now it's only going to cost me $100 to enter this position. So that's that. But I mean, with that, you are risking your entire collateral with a put credit spread, because if it goes below this, then you're going to lose all of this, but you are going to get that credit. So this would be like a 45 to 55 risk to reward ratio. So that's really not too bad, really. But as you can see here, some things to think about. The volume is not really high. I imagine whenever we get closer to expiration next week, this will increase, but I wouldn't recommend put credit spreads for something like this with that low of volume here, because I'm not really worried about, like, even if I do get assigned 100 shares, like that's fine, because I'm bullish on that sector, especially over the next 1 to 3 years. So if I do get assigned, I could start selling, covered calls, and that's great for me as well. I could just lower my cost basis, sell a out of the money covered call, and then just go from there. Yeah, so you can see that's a long call I would be selling. But all right, guys, that's pretty much it for this video. This is how to sell cash secured puts on the Robinhood platform. I do plan on moving away from Robinhood platform in the next couple weeks. The only thing keeping me right now is there's no commissions for options, which is just pretty nice, but just everything they've been doing recently, and I just think they're kind of sketchy, and they're not really looking out for the best interest of the retail investors. So with that, I am looking to move. I do currently have an account, like I've mentioned in a lot of videos. I'm on the TD Ameritrade platform, and I use Thinkorswim a lot. But I'm also thinking about possibly moving to another one, because I want to have 2 of those there. I'm thinking about Tastyworks. I've seen a lot of good reviews about Tastyworks, so I'm going to look into that a little bit more and get some more feedback on that. But all right, guys, that's pretty much it for this video. Thanks for watching.